Welcome everyone back to Chopper's Charts. We're getting into phase one, part two, and we're getting started. I'm excited about this. Now we're getting into the nitty gritty of experimentation to find your trading edge and rules. This is where the fun starts. It takes work, it's going to take effort, but it's fun. Previously in part one, we found the tools and boundaries for your trading edge. You should have found your instrument, your time frame, and the trading session time that you want to trade. Now, we put these together and discover what works and what does not work. This is going to be fun. We're going to go through this. There's a lot to learn. Let's give it a shot. Getting started. Here, we're looking to define our playbooks, rules, and edge in trading. Since I trade the Tory Trades trendline system, my examples will be based on that. If you trade something different, a different system, this will still work for you. You'll just have to apply it to your system. I want to start with the base of the system. In this example, it'll be the trendline system. Here we have a 3 touch point break and a 2 touch point break of trend line. This is the base of the Troy's trendline system. These are the signals that you want to trade to. But how do you get to there? How do you know that this break or that break is going to be a good one? This is where you find out. This is where you start studying it. Perform the setup the same as you were taught with a top-down analysis for your trend lines. You want to go through and set up your charts exactly like you were going to in the beginning. You also want to find a timeline that'll give you about 20-30 trades. If you're a 4-hour trader, just an example, a year's worth of trading should give you 20 to 30 trades. And that's a good start. I did all mine on the years 2023 and 2024. So just to get an idea, in TradeZella, you can set it up by the year and you can go with that. Taking trades. Since this is an experimental phase, I suggest taking every trade you see at first. You want to just gather information. You're just going to take 20, 30 trades and then take a look at some of the tags and review the trades. And then this will be explained soon. But you're going to just do 20, 30 trades, get them out, get them done, and then we're going to step back and we're going to review this and we're going to get more information and start fine-tuning it. While doing this, you'll need to do the following in TradeZella. You can do this on a spreadsheet for tracking. I highly recommend TradeZella. Absolutely best product out there for tracking, back testing, journaling. It's going to give you reports and it's so robust. It's unbelievable. So journal every trade. You don't want to worry about a lot of detail nor specific price ranges. Note why you took the trade and what made you think it was a good trade. Tag everything you see in the relation to the price action. You want to know what's happening. What's the market doing? What are the candles doing? What are the trend lines doing? What are the support resistance lines doing? You're just tracking everything you're wanting to see and start developing how you see price action. I will show you some tag categories and tags that I use to help figure out my trading rules. Some of these tags, the categories are good. The tags themselves may not make sense to you. So you may have to just add your own in there, but at least you can get some categories. And then finally, you want to take a screenshot for reviewing later. This is really critical. You want to mark the screenshot up so you know when you entered and exited and where your stop loss was placed at a minimum. If you got any other notes you can think of that you want to mark up, that's even better. It's going to be really crucial because after these first 20, 30 trades, we're going to go back. You're going to review those trades and you're going to be looking at screenshots and you kind of want to see what all you were doing. Okay, let's start with this. We're going to journal the trade. Keep this simple. Main goal here is to start recognizing price action. You want to journal things like your candle movement, support, resistance, level action. Any other reasons you thought this might be a good trade. Here's an example of what I would put in a journal. And most of this little piece of journaling is just so you got a refresher when you're looking at the screenshot. You got a little refresher of what you did. So I took a 2 touch point trend line breakout for short. Price had been going up and broke a lower trend line. Strong candle broke through and I entered after the candle closed. No candles rejected the upper trend line prior to breakout. And so that's saying that I didn't get it, the candle didn't hit the upper trend line and reject it prior to breakout. Trend lines are grouped tight, kind of like a laser shot. It's when you got 3 or 4 trend lines and you're trying to see things, and you'll see what I'm talking about here in a bit. No support and resistance level at break. So that's just kind of like a general, and this is my wording, but you're going to find your wording. You just want to be able to read this and say, okay, and then you're looking at your screenshot and you say, okay, now I know what I did. You're going to tag your trades. Here is the meat of where Trade Zealous shines in building your trading plan. Tags are things you see in your trade. These can vary by system and trader. You're going to come up with your own. And it helps you really see what is working and what is not. There's no more guessing. There's no more, this always happens because it happened 2 or 3 times. You're actually going to find out, does this always happen? Is this a thing? Because you're going to have trades and quantities to let you see what is really happening. No more guessing. No more thinking you got it figured out until you've seen those tags prove it. Here are some of the categories and tags I used in building my trading system. Use this as a guide. Start here if it helps, but I'd hope to start seeing your own things over time. You want to develop your tags. This is your experimentation. This is your brain. This is you trying to figure out how to do this. So a couple tag categories. I like to tag the trend line. I kind of want to know some ideals about the trend line. I took a 2-point touch break. I took a 3-point trend line. Maybe it was 4+ points. I think after 4-point touch points, I don't really need to get that nitty gritty, but you might want to. My point B was bad, or my point C wasn't really good, so it was bad. I had gaps after points. These next 4 referred to how that trend line was hit. So you always have your point A, and then it'll pull away from the trend line for a while, and then it'll come down and it'll touch it again, and then it'll pop up and go and break down. That would be a gap before points. A gap after points means you got your point A, shortly after you have a point B, and then it gaps up, goes away, and then breaks the trend line. Gap split between points. You have a point A, it goes up. You have a point B, it goes up again. You have a breakout. So you're kind of split, and that's kind of what that meant. You can track that or not track that. It doesn't matter. But you can see if it's making a difference. Something like that. Could it make a difference on your entries? I don't know. Less than a week of data, over a week of data. You could have a month's worth of data. However you want to word that. Then we have the pattern. Okay, the pattern is, what was the candle pattern prior to getting to your setup, getting to that point of breaking? Did you have equal highs, lower lows, higher highs, higher lows, lower highs, lower high lows? I had one was called a retest or a pause after break, retest pause before break. Um, I have I have one called walk the line on an action line, walk the line on a safety line, walk the line on a support resistance level. That's usually a string of 4 or 5 little indecision candles all in a row. And then a wedgie. Trend lines are coming together, you're getting it into a wedge. Um, it's a pattern. Candle reaction. That's, how did, this is based off of the candle as I entered. I entered in a candle. Was the candle full at break? Did the candle pull back halfway at break? Did it pull back below the action line? Was the candle strong at break? Was it weak at break? These are things you want to see because a convincing break can be a lot of things. And we're all in different time frames. So you want to kind of know what's the candle reaction of the candle you entered on. Overall trend. So this is looking back, is blowing it up into a higher time frame than what you're trading and saying, what was the overall trend? Was it in gel? That's consolidation for those who don't know. Macro trend. Was I against the macro trend? Was the macro trend going up and I was getting in on a short? Was I with the macro trend? The macro trend's going up and I was getting in on a long. Was the micro trend? Now, the micro trend is, for me, you've had a good long macro trend, say, going long, and then it came down and then it's still coming down. So now your micro trend would be in a short, and or your micro trend was up. So up, down. These are just things I track to just give me a better picture of the overall price action. Entry. Did I enter the candle after the pullback, after the main candle, after pullback, before the main candle, break of support and resistance? Does the candle close? Was the candle open? Did after it immediately broke the trend line, or was I entering after it cleared a previous wick entry? Candle reaction, candle full after break, candle pulled back halfway, candle strong. So those are some of the things that you can look at. Take a few of those, figure it out, see which ones work for you, develop your own. These tags in TradeZella are absolutely critical in helping you find your what's working. Everything else, if you're not tagging it, you're guessing. You don't really know, and that's the beauty of TradeZella. It's going to let you know. It's going to let you know if it works. All right, we're going to take a screenshot. I got a couple examples for you coming. So a screenshot is so important. This is what you're going to look at later in reviewing to see what the trade looked like. You're going to go back and look at trades. And this is where some of the meat of studying and finding out price action and your trade setup and understanding this. You'll be able to look at the trade, price action, and exit all in one. You're going to study these after about your first 20, 30 trades, and you're going to start making notes of things you see. You want to first review your winners. Everybody says you learn from your losers. You learn what not to do, but your winners tell you, they start showing you repeated patterns that work. And that's what we want. We want to know what works. So you're going to look at your winners first and start looking for repeated patterns that you're seeing and start highlighting them so that you can maybe add them as a tag or whatever. You're going to start seeing this price action. What are them candles doing? What's that price action looking like before it breaks out on these winners? Out of these 20, 30 trades, do I got 10 repeatable things that I can track? because that's going to be a key to you building a really good playbook. Now you're going to look at your losers, and the losers will tell you what may not be working. I say may because not all losers are bad trades. So you got to realize you can't have 100%. So you're going to have losers. Your system, your patterns, your whatever you're seeing, you're letting the majority pattern. But some of those are going to still lose. They're always going to have losers. So you need to kind of work that a little bit. You got to know in this stage, knowing this will help you spot trends that lead to losses and avoid them. And you'll need to find a balance between both the winners and the losers. So kind of look at that after you've looked at the winners. Mark these screenshots up so you can remember the details. Mark them up, mark them up, mark them up. Now, here's a couple of mine. So this was a winner in gold on the 4 hour. And I mark up, I start my line at the candle that I entered on. So I entered here. So I know I entered on this. And what I saw was it came up, it hit this downward trend line, came down, rejected again, came down, started coming down here, rejected this lower trend line a third time, and came up, engulfing candle, strong candle, powered through. I entered here above these wicks. It came back. The next candle came back, hit the top of that trend line, and continued on. Went a little sideways, did a little bit of walk the line. This is what I was referring to on that. Walk the line on this support resistance level, and then took off. It broke this trend line with a strong candle, very similar to this first one. A very strong candle broke, so I added a contract. The next candle went through, but it wasn't strong. This one pulled back really hard. I didn't want to add a contract. This was not convincing to get myself into a point of it possibly turning around, and then it's rejecting. It's having a hard time getting through this trend line. And so I just waited. I moved my stop up, and it came down, exited me, and I got out of the trade. Here's another example of my walking the line along the trend line. This is what I was referring to when I said a laser show. Was it a laser show? I mean, that's a laser show to me. You just got boom, boom, boom going off of that. So the real hope was that it was going to break this trend line and continue up to here or better. It didn't do it. It didn't have the power. Another thing I noticed in this trade is we worked our way. We hit an all-time high, and we came down hard. We struggled to get back up, created this trend line, and came down hard. And this is if you notice, this is kind of helping create this bottom support line. It came up here and it came down hard. And now you're going to see on my next example where I lost a trade here. And then it slowly worked its way back to this point here. I was ready for this to happen again. I was expecting that, and I'll show you on this next trade, I was expecting this short to be this. What I wasn't paying attention to is I didn't make it back up to this line. So I was looking for this back here. And those are things I can learn from. Those are things that I'm seeing. I'm seeing patterns. I'm seeing a process. Now I got a little win off of this one, and it was okay. But here's that trade I was telling you about. You can see the pattern. I had a drop. We worked back up. We created this trend line. We had a drop, and then it came back up, and I created a point B. This was kind of steep. I'm not too proud of that one. It came down. It broke this trend line here, And I entered here, and that candle pulled back, and that's what I wanted to see. I want to tag that. So I tagged that being a candle that pulled halfway back. It didn't pull back behind the action line, but it pulled halfway back. The next candle was green. The next candle was, we're fighting this trend line. So I pulled my exit down to here to because it's just reversing on me. And so I got out here for a small loss, and it just kept going. And as you know from the previous one, it kept going up to here, came back down, and then gave me this one. So that's kind of how I like to mark my charts up. I like to be able to take and look and see a bigger picture. Gathering information. All right, so now it's time to study. You've already gone through, you've taken a trade, you've tagged it, you journaled it, you took a screenshot, you marked your screenshot. You've done this, and you've gotten 20, 30 trades in, and now we're going to go gather some information. What have we got? We reviewed our trades, and looked at the screenshots, kind of analyzed them a little bit, made some notes. So now it's time to study and review the reports and your tags, the trades and your screenshots. TradeZilla helps with this. If you're using another form of recording information, you'll have to review that as needed the same way. However you're recording this. The focus of this phase is to find your edge, get a trading plan base that will be proving, we will be proving in phase 2. Still capable of tweaking and fine tuning, but something that is rule based and works for you. Something that you can see, something that you can put together on a piece of paper and say, this is my rules for entry and I don't do anything else. So this is how we're going to do it. In TradeZilla, reports give you what is working and what's not working, how many times something happens or does not happen. So not everything's about whether or not it's working or not. It's just a matter of how many times it's happening. You might track something that you saw and you tracked it once and it's only happened one time. Maybe it happened 3 times in the 20 trades. Maybe you thought it was something, but it isn't something. So you're going to kind of find out. And you tag something that you saw and you find out that's happening almost every trade. So you kind of start getting to see things and what's happening and what's going on. There are many other reports, we'll get to those, to see what is best as well for your trading. Just a reminder, only trade the minimum amount. This is not about making money. We're focused on technical only. And something else I don't have written here is you want to trade your time session. Remember the phase 1, part 1, we talked about finding your session. You want to stick to that time frame that you can trade. Don't trade any other time frames. Don't trade any other time instruments. Don't trade any other time frames. You want to stick to those things. When you're on TradeZilla and you're taking trades, pay attention to the time that you're able to trade and stick to that. Make sure the amount you start with is the amount you picture yourself starting as a live trader. You want to trade in your budget, in your amount, your time frame, your time session, and your instrument. You got to get good quality data to go and to make sure we got this figured out. So stick to those rules, or you're going to get data that doesn't necessarily work. So let's go look at reports here. TradeZilla. If you're in back testing, you can go to your trades. You come to here and go to your reports. This is just absolutely incredible information. So I've only got, and up here you can filter to the session. So I'm going with this session here. It doesn't have a whole lot of trades on it, so our report's going to be a little thin right now. So here you get an overview of everything. I don't look much here, but maybe you might find something that you are interested in here. I like to go to the reports. I like to look at my days and times. So if you're a day trader, this is really critical. What days are you best performing on? As me, a 4-hour trader, I'm a swing trader. This may not be as accurate because I may enter a trade. This may be when I close the trade, but I actually entered, 3-4 days ago. So not quite as accurate for a swing trader, but any intraday trader, this is going to tell you exactly what's best for you. As a swing trader, this is what's going to work for you. What months are good? Like right now, this particular trade's only into March, so I had one trade in February. I had one trade or two trades in February and one trade in January. So kind of starts seeing how many trades you take and then what the win rates are, and you can kind of get an idea of your months. You can look at your playbooks. We don't have a playbook yet, so we can't look at playbooks. Scratch that. Tags. This is the meat. I love this. This is the meat right here. So here's my tags. These are all the tags that I use that I just shared with you, and this is giving me how many trades I've used this tag, how many trades over a week, 2 of them. Win rate was 50%. If this number is below 20, it really is not very strong number to give you a good representation. You want 20, 30 trades before this number is giving you a good representation of is it working or not. So you get to 2 touch point. All these just have one. Gap is tight. Come up here. Here's all my tags, and I can go right down this list, and I can see all my tags. I can see how they're doing. Candle full after break. Had 2 of those. 50%. We had candle pullback half at break. So we had that happen, but it turned out to be a winner. So this is where you're going to start figuring things out that are working. The overall trend, I'm starting to get how many trades it took that, how did it work? And then the pattern. Walk the line, safety line, 1, 245. So this is where you're going to get that meat, that point of gathering information. You're going to start finding out things. I say tag everything. I don't care if you got 1,000 tags. It might get kind of confusing. But after your first 20, 30 trades, you can go in and you can kind of take a look and you can kind of say, you know what, I don't need to track that anymore. I don't need to track that. I don't need to track, and start filtering things out. Ooh, I want to track that. And after you've reviewed your charts and everything, you might be thinking, oh, I need to add this to it as a tag. I need to add this as a tag. And I'll take this out and I'll take this. And you're going to kind of fumble around with them. And you're going to go for another 20 to 30 trades. You're going to go and get another 20 to 30 trades. I like 50. I mean, honestly, 100 trades is going to give you, the more trades you do, the more accurate that information is going to be. So dig in, grind it out, take it slow. Don't hit it hard and fast. Take it slow. Do all the steps. Get this going, get this recorded, get this data. This is what you really need. Building a playbook. Now we're getting this data. Now we're putting things together. Let's get a playbook put together. And I'll show you an example of my playbook, my 3 touch point playbook after this. These are the categories you want for a playbook. You need an entry criteria. What does an entry criteria consist of? It consists of your setup. Do you have a setup? Can you say what my setup is? Setup is the price action prior to entry. Entry trigger. when you actually enter, or when and where you want to enter. If you're a 15-minute time frame trader, you may want to make sure you enter at close of candle. You're a 1 hour trader, maybe you have a rule where you can't enter until the last 10 minutes of a candle. And I'm just throwing things out there. If you're a 4 hour trader, I personally enter at the high wick of something. And so that's automatic. That happens every time, every trade. So I don't necessarily need my entry trigger in my playbook. I just know this. And then your entry risk. This is your initial risk that you're taking for the trade. Me, it just needs to be low risk. Low risk means it needs to be 1 to 2%. I cannot take a trade at all over 2%. I'm not there. I may experience that in the future when I'm really good, but right now, no, I'm not doing it. 1 to 2%, that's it. It may be that way for the rest of my life. I don't really care. I love that rule. It feels safe. And honestly, 2% sometimes is really hard. That's a lot of money, and I can find plenty of trades below 2%. Trade management. This includes an exit requirement. When do you exit? Do you exit at a certain amount of ticks? Is it 150 ticks? I get out. 200 ticks? I get out. Is it a support resistance level? I get out at the support resistance level. Don't care what price does after that. This is where I want to go. Is it a dollar amount? I get out. I want every trade to just hit this certain dollar amount. I get out. I risk this. I make that. I'm happy. That could be you. Maybe it's a safety line. I don't get out until it crosses that safety line at all. Or I use a steeper safety line once I'm able to, and that's when I get out when it crosses that. So there's all kinds of ways you can figure this out. And you're going to track that. You're going to tag that. I noticed it wasn't in the tags, but you can start tagging that stuff and start kind of building that plan. And then what do you do if it starts to turn on you? Do you just sit and wait? Do you get out a little earlier? Some people don't like doing that. They'll like to sit and wait and let it cross their safety line, which is what Tori's trade system is all about. Some people don't want to wait that long. If you don't wait that long, there's a good chance you're going to get it's going to turn around back on you, and you're going to miss the trade and it'll take off. So there's always a good and a bad. There's no perfect. Always a good and bad, no perfect. You got to figure out what's going to work for you. You can have a few things for each item. It doesn't have to be one singular rule, and I'll show you that soon. You can then track those in the future when you're playing your book, and you can track the few things and see how many times you get hit on those different things if you have more than one. But they need to be hard rules. They need to be rules that you're gonna take, that you believe are working. Something you know, something you can duplicate. Here's my rulebook. I have my setup. This is my entry criteria. I need a retest or pause prior to a breakout. I need a retest pause after the breakout. This is a 3 touch point trend line. I can have a no retest entry. Now, no retest entry means I got a very, very strong candle breaking through that trend line. Then I'm okay with that. I don't need the retest and pause. It has to be low risk. It has to be between 1 to 2%. It has to be. There's no ifs, ands, or buts. If I cannot identify these 3 items here, I don't get in. If I'm identifying these 3 items, but this one doesn't work, I don't get in. This is the starting point. I see my setup. Is my risk low? Yes. Okay. Now I can enter this trade. I don't see these. I see these and I don't have a low risk. I do not enter the trade. If my 2% is $400 and it's 425, I do not get in. I don't make exceptions. I don't make exceptions. It's just, this is what we're trying to get to. There's just, you don't want to think about it. It is what it is. Additional confluence. I like this. This is not used very much, but in a playbook, I like to see additional confluences. I don't have to have these. This is just additional for my 3 touch point. If I got a support resistance level at trendline breakout, hey, that makes it better. If I get a full candle after breakout, that makes it better. If I have a strong candle breakout, that makes it better. So these things are like additional. It just helps me think I got a better trade. Can that trade still go back on me and be a loser? Yes. I could have this checked, all 3 of those checked, and it can still go back on me and be a loser. But the chances are, because I've backtested and proven these things, I have a higher probability it's going to be going forward. How far forward, I do not know. Trade management. If I'm against the trend, exit needs to be defined. I need to have a defined point for my exit. So if I'm in a trade and the macro trend is up and I'm getting into a short, I need to have a defined point for an exit. And I'm going to trail my stop close because I'm going against the trend. So I get in, I have $200 risk, and I look for a $300 take profit. It goes beyond that, great. I don't care. I don't care. I got what I wanted out of that break. It was a good break. 2 touch point with a support resistance level. Everything looked good. 3 touch point breakout. Everything looks really good, solid. Market's looking good in my favor. I'm going to get out. $200 risk, $300 take profit. This is up to you though. What are you doing? This is just mine. With a trend, I'm going to trail by candle, a steeper trend line and candle. So if I'm with the macro trend, I can trail by candle. I do not have a take profit. I'm just trailing my stop. With the trend, I can add at defined points. I don't have to. This will be determined on what those defined points are available and if it actually works. Looks like it's going to go that way. It's all dependent on the market activity, the strength of the move, and everything. But I can add contracts on when I'm with the trend. If I'm in a sideways trend, I enter the trade and it just starts going sideways. Or I'm in the trade for a while and it starts going sideways. I hold until the safety line's breached. Once that safety line's breached, I'm out of there. Let's go set up a new trade. I don't need to be sitting there for 5 days in a sideways move. Structure break. So the candle, the movement, the price action of the break is good. We get up and it starts breaking down. Once it pulls back, and I have a defined criteria for this. I'm not going to go into details. I know what this means, but it's going to come back. It's created a new point B, and I feel like it's not going anywhere, and other criterias. Then I get out. I exit, whether it's in the money or out of the money. I exit, and then I can move my line and I can set up for a new trade. Move my stop loss to the action line after 3 candles. All right. You're building that playbook. You're experimenting. You're reviewing. You're studying. You're learning price action. You're getting into this. You're digging deep, and you're figuring things out. You're trying to find what is my edge. What is it that I'm going to trade? What is it that I see that is working for me in the 5 minute on the London session open only because I only have 3 hours to trade during that time. What happens here that I can make work? Or what happens here when I'm in the 4 hour time frame and I'm sleeping during New York Open? What works for me in holding those trades overnight? What's happening that's going to make me comfortable? Um, I'm a 1 hour trader and I got my rules set up. I've got everything's working. I can trade. I can pretty much trade all day during the New York session. Uh, but what criteria would it be that I would want to swing that? Let's say I got a really good trade going on. It's not breaking down and I want to hold it overnight. What does that mean to you? What is that rule? So that you're not in it going, what do I do? What do I do? No, you want to have an answer to that. That you need that to be there needs to be an answer to that question before it happens. Do I hold over the weekend? Answer that question before it happens. You will know. One of the benefits of my system and staying focused to trading only your session is for me, I shut my computer off at 6 a.m., 7 a.m. So I jump and skip that time that I would be asleep. You can do this on TradeZilla. You skip that time, I jump to the New York Open again, and that's where I start trading again. I know I'm holding my trade, and so I know that am I getting knocked out or not? And I would say 90% of the time I don't. I never get knocked out overnight. It's very, very rare. So, but that's because of the instruments I chose as well. They're active in the New York Open, not so active in the Asian session and in the London session. There are times I could get knocked out though. Not everything's perfect. We're working on probabilities. I cannot stress enough that we want to build this without a focus on money. Get your mind off the money. We're just looking at technique. We're just looking at technique. One contract. It's not about the money. It's about the wins. The wins and the losses. That's it. I don't care if the win's $50 or if the win was $2,000. It's all we want to know is what works, what doesn't work. And the only way you can find it is wins and losses, but we don't care what the money is. That doesn't matter. Technique is what's mattering here. This is you building your trading rules, your edge. This is your edge, not Bob's edge on the Discord or whatever. It's your edge. You're building your edge. It's so cool to me. You're the creator. No longer just trying to copy, but you're finding your edge. Someone says, "Oh, hey, I'm getting in on the Discord." They're saying, "Hey, I'm getting into gold, and it's doing this and this and this." And you look at it and you go, that could be a good one, but it does not fit my system. It does not fit my rules. I'm not getting in. And it may go. It doesn't matter because you know your rules. By the time we're done with this, you will know your rules work. They will be proven, they will be accurate, and you'll know they work and you'll know how they work. And you won't care if you missed a trade. You won't care. Your FOMO and your FOLO and all that stuff will just kind of melt away, and your confidence in what you want to see will just be stronger. Yes, you have a system from someone else's base. You have Tori's trendline system. That's an awesome base. And that's going to be the base of your edge. But here is where you make it fit your thinking and your trading style. You don't even know what your trading style is. Maybe you kind of do. You're going to make it fit. This is what makes us so exciting. I use Tori's trendline system as my base. Absolutely love it. I did support resistance prior to this, and adding Tori's trendlines has totally improved the way I see the charts. It has completely transformed my trading. It guides my trade setups. It tells me, it guides my risk. It guides my trade management. Yet I have made it work for me. I made it work in my mind. I made it work in my eyes and how I trade and how I see things. I see the price action and all the things that help reduce risk and have a better win rate than I did before. But I did that. I made it mine. This is exciting to me. I don't know if it's exciting to you, but it's exciting to me. I'll be starting to prepare a video for phase 2. We'll see you all for phase 2. This is where we're going to take your rules, your edge, and we're going to prove that they work. You have a plan. You're going to build a playbook, but phase 2 is going to be a deep dive to show you that it is absolutely proven to work. I'm so excited. Enjoy your experimentation. Enjoy this time. Take your time, study it, get it figured out. Make it as simple as you can. Make it as simple as you can. It's yours. Go make your playbook. Thank you for joining Chopper's Charts.